So if you have been here before, you know what is about to froth from my mouth any second now. So without further delay, how about I just do it? How about I greet you with the official hashtag Joyant, the official hashtag Jubilant. To all of my good friends out there circling the globe, is so good to see you. I mean, obviously I cannot see you at all, but I virtually see you. I know you are there and I do appreciate your support. Now, on that note, if you do like this video and you really like the effort I'm putting into these every day, give it a thumbs up. Give this video a like and a thumbs up, and subscribe to the channel if it's your first time by. My name is Doug. I'm with Trade with Doug, and every day I'm sitting here grinding it out in the stock market. I'm just doing my thing every day like I have been for 2 decades, and I'm here to share that knowledge with you. I'm here to just share stories, tales, all that good stuff, and provide you with quality trade setups. So before I start, if you do need help, down in the description box, you will find me in my trading community. Now, I want to take a little different spin. I've been talking about stocks to trade, and I tell you what, the stuff that I've mentioned has been doing good. Voozy. Man, this thing is a beast. I mentioned that last time. Beast of a stock. A lot of these other things that we've been talking about, Facebook, beast. I mean, some of these things are just ripping and continue to rip. And a lot of the stuff we were talking about did really well. So I'm hoping more than anything that you're doing good. So I want to kind of move to an educational format here. And one of the things I want to discuss is sort of this battle we have within ourselves as traders when we are too focused on what the potential outcome is going to be with a trade. And it doesn't matter what you're trading. This is just trading in general. And what I'm saying is, a lot of traders want to look at risk versus reward, but the real true unknown to what we do is the reward. We never know what we are going to get. Sometimes we have a really good positive vibe about a certain stock or a certain feeling, like I am with Voozy right now, thinking it's going to go to 50. But we might be wrong. You know, I've often felt sometimes in the past, the more enthusiastic I've been about a trading idea, the worse it's been. There's also been several trades I've taken, and I'm sure you have as well, that you didn't feel that good about it, but it worked out better than anything. So what I want to talk about today is the process that we do. Our job as traders is risk number one. We look for great entry points. We look to manage risk. The reward, the outcome of what happens, is unknown. On some of the stocks and trades we take, we're going to be stopped out. Some we are going to lose on. Some are going to disappoint us, and some are going to surprise us. The thing is, when we take it, we don't know, so we can't just be selective. We can't pass on these opportunities and say, well, I don't want to take that one because I feel it's not going to go higher, excuse me. If the setup is there, you take it. So I want to talk about 3 different stocks I've brought up, 3 different trades that I've taken, 3 of the same patterns, but with 3 different outcomes. And this is what you also have to know about trading, because I've mentioned this before, and I think this is a very important thing to talk about, is that, like I'm saying, with all these trades, they have different outcomes, and you can't just necessarily anticipate what the outcomes are, but this is how you get through your trading. It's not based on one really good trade that you're going to make. What you're judged on in this business is your longevity and your body of work. So when we're looking at trades, we're talking about doing something that we know is going to work over 10, 20, or 30 trades, or produce a certain result, a percentage of winning, percentage of losing, over the course of time. Anybody can have a skewed record during a lucky time like a bull market. And that's what we don't want to do, is confuse luck for skill. So let's talk about 3 different trades, 3 different outcomes, and how I look at stuff when it comes to managing trades and so on. So the first, we're going to look at 3. We're going to talk about TER, we're going to talk about SPOT, and we're going to talk about ACOM. Now, if you've been around, these were all swing trades. These are not the day trades, these are swing trades. If you've been around before, you know I'm the check mark thing. I do the check mark pattern. What is a check mark pattern if it happens to be the first time you're here? I'm looking to take strong stocks that are in long-term uptrends and buy them on pullbacks. I do not buy breakouts. I buy them on pullbacks. So for the sake of time, consider it like a pullback strategy. I look for it to base into support, and then I look for the standard check mark move. So you have this stock here, TER before, moves up high, pulls down really strong and abrupt, finds a support area from a past level that we can draw on. Now, why do we do this? Well, you need to be able to manage your risk right? So all the chart does is tell you where's a good, where you might meet buyers, where you might meet sellers. The pivot just allows you to say, okay, this is where my stop is going to be. And of course, when they come into, not all the time, but a lot of times they'll just pull down into support and then they move back up, making a new high, hence the check mark, down into support, then a strong second wave back up, down into support, and really easy to associate yourself with the check mark. So what happens is back here, a couple of weeks ago, we have the makings of this check mark, okay? Now this thing bounces back up and it's a little bit of a stall and it moves back up in flat lines. Then it makes this aggressive move to the upside in this tear. And it looks like right now it's going to reconnect with this 147.90. Now, if you're watching this for the first time, do not buy this here. It's too high. You've already missed the window of risk versus reward. So I don't suggest that you do it. But you're going to see three trades, like I said, with the same three patterns. It's the same three check marks, but three different outcomes. And you're going to have these, and what I want to translate is how do you manage these and understand what you're doing and how to grow as a trader. You have number one here, which is, I'm going to call it a simple trade, an easy trade, for the lack of a better word. What I mean by that is this trade worked out right away. I get in it, it bounces up, and there you go, profits. Now, why is that cool, right? Well, think about it. Isn't oftentimes the very best trades you've taken those types? Now, why is that? My theory is this. That's because it happened too fast for you to self-sabotage yourself, right? It happened too fast for you to change your mind about the stock, right? It just worked. You're like, wow, sweet. Now, you're going to get a handful of those, but here's what I want to tell you. Out of 10 trades that I would take, I might see this one time, right? Maybe two times. So in your trading, it's probably going to be very similar. You're going to find yourself taking like 10 trades, 2 or 3 of these are going to work perfectly. Then you're going to have maybe 4 of these that are just like, I don't know. And then you're going to have a couple of losers right off the bat. It will be those, I don't know trades that will define you ultimately as a trader, because it will be how you manage those trades and maximize that. That's what's going to make the big difference here. So trade number one was tear, and this was sort of, I'm going to say, an easy layup. I got into it. It never stressed me out. I never had drawdowns, and it just explodes to the upside. Pretty simple, low stress trade. And again, for us as traders, where that comes into play is that often we don't self-sabotage our process. The thing works out for us. So when we move over to something like spot, you're going to see the same type of check mark pattern here. Okay? But it's a little bit different. It pulls down a little bit deeper, right underneath, and it starts to begin a check mark, but only makes it back to the 200-day moving average. Where tear had just kept going on a tear, launching upward, this one now gives us, let's say, a stumbling block of thought. Because now we're stuck in this zone here and we're debating, do you take the small profits you have on this trade, or is it just basing and waiting to clear the 200 moving average? Well, here's the truth. None of us really know that. It's a day-by-day process. So as I'm looking at this one right here, this one is, let's call it maybe a little bit more confusing because it's using this area as resistance. So there are now multiple possibilities that a trader has to be faced with. We either trade sideways and move higher, or we fade lower and possibly even break down and get more aggressive. Now, what you do in a situation like this for me is normally on a strong move right away, I want to pay myself. I want to pull some of the risk off of the table. I've been around too long to trust any stock. I don't have a belief and a total 100% conviction in any stock. But here's where you're seeing the same type of a trade, but a different result. Now, the different result here is a very small bounce followed by confusion and consolidation and nothingness. So right now, this trade is basically in limbo. And what you don't want to do, the last thing you should do as a trader, a high frequency personal trader, a retail trader, if that's what you want to call it, maybe not high frequency, is you cannot allow this to come back and take you out and turn negative. At this point, you must pull your stop up here, keep it very tight, and if you don't get a move how I would look at this one is if I don't get a move in a couple of days that moves outside of this range, then I will just cut this position because it's not worth me keeping, because the chances are if it doesn't come out in the next 2 to 3 days, it's probably not. And if it does, I'll be able to catch the move when it does makes it move out of the range, if that's what happens. So the key here is sometimes they will do this, and you can often struggle with this one because you're not knowing yourself whether to keep it or hold it. And the thing is, look, you can't be perfect here. Sometimes you're going to cut these and they are going to go higher. Sometimes you're going to leave money on the table. Sometimes they're going to come back and bite you. But at this point, with this market and the way things have gone, I think it's better that you don't take too many unnecessary risks. So all we can do now is trail our stop up. If it gets hit, it gets hit. I mean, that's it. It's black and white. It's cut and dry. There's no debate about any of this. It either does or it doesn't. If it goes higher, then great. But some will, some won't, and that's not the fault of spot. That's just the way the markets work. Now, the last one is AECOM. Again, the same thing, another check mark here. This one is doing a different pattern, okay? This one now is what we call a grind. So let me explain. You had Teradyne, which came down and had a violent parabolic, okay? You had Spot that came down and had a tiny bounce and has not even began to complete the last piece of a check mark. And then you have AECOM with this longer, stretched out linear piece. Now, what do these mean? Well, when you have anything like this that's very, very steep and aggressive, normally what that indicates is a high degree of emotion. That's what parabolics really mean. When you look at a parabolic, you say, what does a parabolic mean? It's euphoria, it's emotion. What does that translate to? That means people are buying this without thinking about the fundamentals, without thinking about the technicals. They're willing to overpay for this. They're not thinking about their surroundings. They're just haphazardly hitting the button. That's why oftentimes parabolics need to be sold, because they're unsustainable in most cases, okay? Not all of them, but in most cases they are. So the obligation, again, is when you get a parabolic, you should obviously pay yourself. Now, when you're seeing AECOM, you're looking at something that is the strongest of trends, where you have these long grinds. We call them grinds, where they just sort of melt up. It's slow, it's methodical, and it's consistent. It just keeps grinding and grinding and grinding. This is more stability, because what this one does is it signifies that there's always buyers every single day constantly flooding money into it, and it's absent of euphoria. So it will continue to grind and perhaps go far higher than the parabolics will. So when you're looking at something like this, this is where trailing up in positions really pay, because the chances are it will continue to grind and move to 110s, maybe 120s. At some point, maybe it ultimately goes parabolic as more traders watch it and feel they're going to miss out and get FOMO. The thing that you're looking at here is, when you're a trader, your job is to stay true to that process. How you become true to that process is you've traded it for several years, right? You've tested it through several markets. So what I'm demonstrating for you today here are 3 trades that were the same exact trade, but all 3 of them have a different outcome. One was very low stress, super enthusiastic, parabolic, and immediately profitable. One is barely profitable and has been quite a struggle, at least mentally, if you're focused on it, because it didn't bounce very far and I don't have a whole lot of room. So I feel I should pay myself since it's lagging, and I should trail my stop up to break even. So I shouldn't, at least, the worst case is I just break even on the last piece. Now that may become disappointing overall, but I think that's the best course of action to take, because I don't know if spot's going to go higher or lower or nowhere. Nobody knows this. And then the third is where you're grinding out at a much slower pace. So the slower grind, consistent, methodical one most likely will be the one that stretches the furthest, even though it will take longer time to do so. So when you're trading, you initially get in, the principles why you get in will always remain the same. It will be at support, it will bounce, I buy. That principle never changes. The exit principle always changes. That's where traders really get paid, is in this management part. When you're looking at these things and you're deciding based on market events, market climate, things that are always coming at a trader, this is where you ultimately will be successful or not. I think most traders can figure out how to get into a trade. I think where most traders struggle is exiting. Do I sell now? Do I hold? Am I leaving money on the table? Am I letting my losses come back and bite me? Am I having several wins and then having a bad trade that cleans me out? You know, this process we all have to go through. So in short, this is all about your management. Your management will always change. You never know what the outcome is going to be, and none of us do. All we can do is simply take the trade based on our process, keep our risk as low as possible, and let the market dictate what the reward is. In linear, strong, super bullish markets like we experienced in November, December, January, and early February, it's going to be a little easier to get these targets. It's going to be a little stronger market. You're going to see more linear, you're going to see more parabolics, you're going to see more buying because of the bullish nature of the market. In NASDAQ corrections like we just experienced, it's going to be a little bit tougher. As long as you're prepared for that, then everything is fine. So guys, I'm going to cut it there. Remember, as you trade tomorrow, think about the management part of it. Some of these trades will be easy, some of it will be hard, some of them will confuse you, and that's fine. Your job is to manage the trades the best you can, because it will be those 3 to 4 trades that you do a great balancing act with and make the right decisions with that will ultimately change you from amateur to professional. So like this video. I do appreciate it, guys. Thanks for watching. Thanks for your support. Any tips, comments, quarrels, complaints, or curmudgeoning suggestions, put them down in the description box as well. Until next time, take care, trade well. See you soon.